Did you know that leaving money sitting in the bank could be causing you to lose purchasing power every day? While most people blindly trust financial institutions, the real millionaires know exactly where to store their fortune to protect it from inflation and make it grow consistently. But why don't the banks want you to know this? Because they profit when your money stays there. What if you could access the same strategies that the rich use to preserve and multiply their wealth? In this video, I'm going to show you 5 safe and highly profitable alternatives that the banks will never tell you about. If you want to get out of the rat race and start making your money work for you, watch until the end because this information could transform your financial life. Also, leave a like, because it helps YouTube understand that this video is relevant to more people like you. Most people grow up hearing that keeping money in the bank is the best option. After all, it's safe, easy, and accessible. But what no one tells you is that your money is losing purchasing power due to inflation. To give you an example, imagine you have $10,000 today. If you leave that amount sitting in a regular bank account or even in a savings account, in a year, it will be worth less because the prices of things go up, but your money stays the same. Now think with me, do banks really want you to leave your money there? Not because it's good for you, but because it's excellent for them. They take your money and lend it to other people at high interest rates while paying you almost nothing in return. In other words, the ones who truly profit from your money sitting there are the banks, not you. If this makes sense to you so far, leave a comment below. Enough of losing money to the bank. Now, let's go to the alternatives that the rich use to protect and multiply their wealth. The rich know that investing in real estate is one of the best ways to build wealth. But buying physical property can be expensive and bureaucratic. That's why they prefer to invest in real estate investment funds, also known as REITs. REITs work like a portfolio of ready-to-go properties that pay rent every month. You can buy shares of these funds for affordable amounts and receive a portion of the profits generated. The best part? In many cases, the earnings are exempt from income tax. Want to learn more about how to invest in REITs? Then comment below, I want to earn passive income with REITs. And of course, don't forget to subscribe to the channel for more content like this. Another alternative commonly used by the rich is investing in gold. And why? Because gold has been a store of value for thousands of years. Unlike money, which can lose value, gold remains strong during financial crises. There are several ways to invest in gold. You can buy physical gold and store it in vaults, or you can invest in gold ETFs, which are funds that track the price of the metal. The important thing is to understand that millionaires always have a portion of their wealth in gold to protect against currency devaluation. If this strategy interests you, comment, I want to protect my money with gold. Now, let's move on to the third alternative. If millionaires don't keep all their money in Brazil, why should you? The real is a weak and unstable currency, so many smart investors diversify part of their wealth in more solid markets, like the United States. You can invest abroad by buying stocks in companies like Google, Amazon, and Tesla, or even acquiring REITs, which are American real estate investment funds. Also, investing in bonds, which are U.S. Treasury securities, can provide security and returns in dollars. If you want to learn how to invest abroad, leave a like on this video and comment, I want to invest abroad. Let's go to the next alternative. Billionaires don't just invest in stocks of public companies. They also put money into private companies that are still growing. This type of investment is called private equity. Private equity allows investors to participate in promising businesses before they become giants. Big companies like Uber, Airbnb, and Facebook received this type of investment when they were still small startups. If you want to know more about this strategy, comment, I want to invest like millionaires. Now, let's go to the last alternative, which could be the most revolutionary of them all. Cryptocurrencies came to change the game of money. And don't think that only young people and technology enthusiasts are investing in them. Big billionaires and investment funds already allocate part of their capital in cryptos. Bitcoin, for example, is seen as digital gold because it has a limited supply and protects against inflation. Stablecoins, which are cryptocurrencies pegged to the dollar, allow you to have safe money without depending on banks. But of course, investing in cryptocurrencies requires caution. That's why, if you want a video explaining how to get started safely, comment, I want to learn about cryptocurrencies. And make sure to subscribe to the channel. Michael Carter, a 34-year-old American, always believed that money saved in the bank was the safest way to build wealth. As an IT manager at a large tech company, he earned a good salary, but he saw his money sitting in a savings account losing value due to inflation. One day, while browsing the internet, he came across a video that talked about how the rich don't leave their money sitting in banks. That was the moment that changed his perspective on finances. He decided to investigate alternatives to invest his money more intelligently. Curious, Michael began to study investments and discovered real estate investment trusts, REITs. He realized that he could invest in real estate without needing to buy a property directly and, even better, receive monthly income without dealing with tenants. With that in mind, he allocated part of his savings to REITs of large commercial buildings in the U.S. In the following months, he began to see dividend deposits appearing in his account and realized that this was an efficient way to generate passive income. As he continued his studies, Michael understood that he needed to diversify to protect his wealth against economic crises. He read about how smart investors always keep a store of value in gold. Inspired, he bought a combination of physical gold and gold ETFs. This way, he felt secure knowing that part of his wealth was protected against dollar depreciation. Michael realized that investing only in the U.S. market wasn't enough. He began to look for international opportunities and discovered that he could buy shares in companies like Amazon, Google, and Tesla through international brokers. More than that, he invested in U.S. Treasury bonds to ensure stability in times of uncertainty. By doing so, he strengthened his portfolio and became a global investor. While talking to a friend who worked in the financial sector, Michael was introduced to the concept of private equity. He was fascinated to learn that he could invest in promising startups before they became giants. Deciding to try something new, he allocated part of his capital to a private equity fund that invested in technology. 2 years later, one of the startups he had invested in was acquired by a large company, and he saw his investment multiply. To complete his investment journey, Michael decided to explore the world of cryptocurrencies. Initially skeptical, he studied Bitcoin and stablecoins. He realized that big investors were moving into this market and decided to test it. With a cautious strategy, he started investing monthly in Bitcoin and Ethereum. In a few years, his investment grew exponentially, consolidating his financial independence. Sarah Mitchell was a successful entrepreneur in New York. From an early age, she believed that saving money in the bank was the best way to protect her wealth. With the growth of her luxury goods store, she accumulated a reserve of $500,000 and blindly trusted that the banks would offer security and good returns. However, the 2008 crisis changed everything. Her money was eroded by inflation, and the abusive fees from the bank reduced her earnings to almost nothing. In 2015, Sarah realized that her business was on the brink of bankruptcy. Facing financial difficulties, she tried to withdraw some of the money she had saved in the bank, but was shocked by outrageous fees and bureaucratic processes that prevented her from accessing it quickly. The bank used her money to lend to other clients at high interest rates, while she could barely get a meaningful return. The frustration led her to search for alternatives. After much research and conversations with investors, Sarah understood that the rich don't leave money sitting in banks. She discovered alternatives like real estate investment trusts, REITs, private equity, gold, foreign investments, and cryptocurrencies. But which of these options could really save her? Sarah decided to bet on real estate investment trusts, REITs, as she wanted a reliable passive income. With the $300,000 that she still had left, she bought shares in diversified REITs, ensuring monthly returns. Within a few months, she realized that the dividends paid were far superior to the meager returns she was getting from the bank. Every month, the REITs provided Sarah with a stable extra income. Moreover, the value of the REIT shares increased over time. In just 2 years, her investment grew by 40%, and she began to recover her losses. With more knowledge and confidence, Sarah expanded her investments, diversifying into American REITs and foreign stocks. Now, her income came from multiple sources, without depending on a bank that profited at her expense. Today, Sarah teaches other female entrepreneurs how to avoid the traps of banking and invest intelligently. Her story has become an example of how to escape bankruptcy and build wealth with strategies that banks don't want you to know about. The world of finance has never been so volatile. Inflation, political instability, and economic crises cause money sitting in the bank to lose value every day. While many still believe that savings accounts and bank accounts are safe, the truth is that this strategy could be costing those who want to build wealth. Banks use their clients' money to lend to third parties at high interest rates, while offering minimal returns. In this scenario, the smartest investors seek alternatives that protect their wealth and help it grow. But what is the best option for 2025? Let's explore the main alternatives that the rich use to keep their money safe and profitable. Real estate investment trusts, REITs, are one of the preferred alternatives for investors who want to generate passive income. Unlike buying a property directly, REITs allow you to invest in high-quality properties with little capital. They work as a portfolio of real estate assets, where investors receive periodic income from rent. The most interesting part: in most cases, these income returns are exempt from income tax. With the forecast of lower interest rates in 2025, the real estate market is expected to appreciate, making REITs an attractive option for those seeking consistent gains and predictability. If there is an asset that survives economic crises and human history without losing relevance, that asset is gold. Millionaire investors know that diversifying part of their capital into gold ensures protection against currency devaluation and turbulence in the financial markets. Gold can be purchased physically or through ETFs that track its price. With global uncertainties and the instability of fiat currencies, having a portion of the portfolio invested in gold can be an excellent strategy for 2025. More experienced investors understand that limiting their wealth to a single economy is risky. That's why many choose to diversify by investing abroad, especially in the United States. Companies like Google, Amazon, and Tesla continue to lead their sectors and offer good growth prospects. Additionally, investing in REITs, American real estate investment trusts, and U.S. Treasury bonds provide stability and protection against currency fluctuations. For 2025, this strategy becomes even more relevant in light of the volatility of the Brazilian economy. Private equity is one of the most profitable forms of investment because it allows entry into promising companies before they reach the general public. Businesses like Uber, Airbnb, and Facebook were propelled by this type of investment in their early years. Participating in the growth of startups and private companies can yield enormous returns, especially in innovative sectors. With the advancement of technology and digitization, private equity opportunities are more accessible than ever, making this an extremely attractive option for 2025. The future of finance is transforming with cryptocurrencies. Billionaires and large funds are already allocating part of their investments in crypto assets like Bitcoin, which is considered digital gold. Furthermore, stablecoins pegged to the dollar offer security and liquidity without relying on banks. The volatility of the crypto market is still a challenge, but the growth opportunities are immense. For those who want to bet on the future of finance and diversify their portfolios, cryptocurrencies stand out as one of the best options for 2025. Each of these 5 alternatives has its own benefits and challenges. Real estate investment trusts offer passive income, gold guarantees security, international investments diversify risk, private equity offers exponential returns, and cryptocurrencies represent the future of the financial system. The best choice depends on each investor's profile and financial goals. But one thing is certain: leaving money sitting in the bank is far from an intelligent option for 2025. Now, it's up to you to decide which of these strategies best fits your wealth-building plans. I've always believed that saving money in the bank was the best way to ensure a secure future. However, upon realizing that my money was losing value year after year due to inflation, I decided to seek alternatives. That's when I came across the strategies of the wealthy and understood that I needed to act differently if I wanted better results. I began my journey by exploring real estate investment trusts, REITs, as the idea of receiving passive income monthly seemed promising. I purchased some shares in well-rated REITs, and within a few months, I began to see the first returns. The feeling of watching my money generate more money was something I had never experienced before. While the REITs provided me with recurring income, I realized I needed an asset that would protect my wealth in times of crisis. That's when I started investing in gold. I chose gold ETFs because I didn't want to deal with the challenges of storing the physical metal. The stability of gold brought a sense of peace I had never felt before. During periods of economic uncertainty, while others panicked with market volatility, my investment in gold remained steady. This was the first time I understood the true value of diversification. With a solid base in REITs and gold, I decided it was time to think globally. Brazil has a history of economic instability, and I wanted to protect part of my wealth from possible devaluation of the real. I started investing in international stocks, choosing companies like Amazon and Tesla, as well as exploring American REITs. International diversification opened doors to a world of opportunities that previously seemed inaccessible. The returns started coming in, and I realized I was becoming a true global investor. Excited about the returns I was getting, I decided to take it a step further and explore the world of private equity. I invested in a promising startup that was developing technological solutions for the financial sector. In the beginning, I had some jitters because I knew this type of investment carried more risks. However, as the company grew, I realized I had made the right choice. Watching a small business turn into a powerhouse and knowing I was part of that journey was one of the most rewarding experiences of my financial life. Finally, I couldn't ignore the impact of cryptocurrencies on the financial world. I had always been skeptical about Bitcoin and other crypto assets, but after studying the subject more, I decided to invest a small portion of my portfolio in this market. The volatility was terrifying, but also exciting. Gradually, I understood that cryptocurrencies weren't just a speculative bet, but rather a financial revolution in progress. Bitcoin, with its limited supply, became my hedge against inflation, while stablecoins ensured liquidity without relying on banks. Today, looking back, I see how much my financial mindset has evolved. I abandoned the belief that the bank was the best place to keep money and began building a diversified and resilient portfolio. Each of these alternatives taught me something valuable, and together, they formed a shield against economic uncertainty. If there's one thing I've learned on this journey, it's that true wealth isn't just about money, but about knowledge and the ability to make intelligent choices. Now that you know the 5 alternatives the wealthy use to store money safely and profitably, the question remains, which of these options makes the most sense for you? Comment below and share your opinion. If this video helped you in any way, don't forget to leave a like and subscribe to the channel. Turn on the notification bell to receive more content that will help you build wealth and achieve financial freedom. We'll see you in the next video.